Michael Burry is an idiot, and in this video, I want to kind of justify why I believe what he is doing is moronic. It is an incredible publicity stunt, but one I do not recommend you following into because I'm sure you've heard of the news as Michael Burry ramps up his short position on Tesla quite dramatically. It's currently worth $731 million as of the end of June, and he is short 1.1 million shares. The current short float on Tesla has actually been relatively decreasing this year, seeing lows it hasn't seen since 2020 with about $21 billion short as of July 30th. That obviously can change going into August here, and I wouldn't be surprised if it bumped up a little bit. But I want to explain to you really quickly the valuation behind Tesla stock, and I'm going to give you some one-to-one, apples to oranges kind of comparisons with some other companies that are highly valued, even against Tesla. So taking a look, because of this news, this rhetoric, he's even shorting Cathie Wood. We've seen the Tesla stock price pull back to about $6.58 a share. Currently, the company is expected to make over $41 billion with a gross profit of $9.2 billion. To give you a side-by-side comparison with another auto company, which I don't think does Tesla justice, but talking about GM, an argument that I've compared this largely to many times in the past, they're expected to do about just under $140 billion in revenue, slaughtering Tesla's net revenue, right? But their gross profits are only expected to be about $21 billion. So we can say Tesla's actually generating a higher gross profit, meaning they have a higher margin. So technically, if they just double their total revenue, they'll be really close to GM's gross profit margins. So clearly they have a better margin business. But when you're looking at GM trading for $73 billion and Tesla trading for a whopping $650 billion, almost 10 times more, it starts becoming fundamentally realistic to see why Tesla is pretty expensive here, right? But let's talk about the forward PE ratios, where the expected growth is to be in the future for these companies. And Tesla at the current price going into the forward PE is expected to be around 94, which again is astronomically high. But let's talk about things like Zoom stock, for example. The current forward PE on Zoom sits at 72, guys. That's astronomically high and actually incredibly comparable. Obviously a little different, but still relatively close, especially if we see Tesla drop down to the $500 range. Those future PEs will be extremely at par. I mean, take a look at Shopify. Their forward PE is expected to go up to 228, and even Netflix, guys, is trading at a forward PE of 40, just under half of what Tesla currently trades. And this shows that the growth vectors in the market are trading at relative high valuations, but there is a good reason for this. I'm about to come into a more opinionated part of this video. Take it or leave it depending on how you feel about Tesla, but I largely compare Tesla to Apple. I honestly feel like we're looking at Tesla as though they just came out with the iPhone, and there has been extreme volatility and a ton of big people that were against Apple in the early days, including the ex-Microsoft CEO. And I know this chart is really astronomical, but if we go back to the drop around 2007, 2008 timeframe, when they dropped the iPhone leading into the Great Recession that was caused by the housing crisis, Apple dropped 54% on their flagship drop of the iPhone. Leading up into 2012, the company experienced another drop of just around 35-40%. Again, in 2015, again in 2018 time period, and again, guys, going into 2020, this company has experienced 30-40% drops, like hiccups that just happen every few years. You can argue this with me, but I truly believe Elon Musk is going to go down as the next Steve Jobs of the auto industry, the space industry, and the legacy he's going to leave behind, I think, is going to be far greater than the current market capitalization that Tesla sits on. So I want to leave you with a quote here, because short-term speculation in the markets, though, can lead to absolutely wild returns on luck. Let's keep that quite apparent. I know a lot of people would state that what Michael Burry did wasn't luck in 2008, but I would beg to differ that the vast majority of his future short positions have absolutely burned him. And same with every single person that has been shorting Tesla up till this point has got absolutely burned. Now, these headlines could drag the price down, leading him into some short-term profits if he decides to capitalize on them. But over the long term here, folks, if you are looking 5 to 10 years out in this company, I swear that the chart is going to be very reminiscent to what Apple has done. But let me leave you with a quote from Albert Einstein and almost reiterated from Warren Buffett. Repeating the same task over and over and expecting different results is the definition of insanity. And Michael Burry taking on Tesla is not the first time. And Warren Buffett famously quoted saying, being asked about Tesla, I would never own the stock, but I certainly wouldn't bet against Elon Musk. And at this point, I want to pass the question off to you. How do you feel about this news cycle going on surrounding of Tesla? Do you think it'll be a short-term blimp? Because honestly, I would expect the Tesla price range to dip as low as around the $500 range. But the sad reality is there's a bunch of idiots like me that have glazed over eyes for this company, and I would gladly pick up any shares in the 500 range. And I'm getting a little juiced up about this current price range. So eventually, you can short it all you want, but when there's a bunch of retail investors out there that have no problem buying this because of the fixation surrounding the product, it's hard to say how low this thing can truly go. But I want to pass that question off to you. Let me know what you think in that comment section. Stay cool, stay awesome, and I'm going to catch you shortly.